You know, it's funny. I've been noticing something lately. Like, there's not a lot of talk about Grab Holdings on YouTube, at least not that I've seen.
Yeah.
And you'd think with their presence in Southeast Asia, it'd be a bigger topic.
Right?
I mean, I was just in Singapore,
Mm.
and that Grab app was like essential for everything.
Oh, yeah.
Paying for stuff, getting rides, ordering food. It was all seamless.
It's definitely under the radar for a lot of people here, maybe because Southeast Asia isn't always top of mind for investors.
Makes sense.
Yeah.
But that's why we're doing this deep dive, trying to understand Grab Holdings Limited a little better, see if it's an investment opportunity worth exploring.
Absolutely.
So for anyone listening who might not be super familiar with them, can we start with a quick company overview?
For sure. Grab Holdings Limited, founded in 2012, headquartered in Singapore.
Okay,
And they're publicly traded on the NASDAQ ticker symbol GRAB.
got it.
What's interesting is they've gone way beyond just a simple app, built a whole ecosystem around it.
It's more than just ride hailing, like some people might
Mhm.
think, right?
Exactly. They still have the mobility services, of course, but also delivery, digital financial services, even enterprise solutions for businesses.
Wow. So
So
it's
it's
like
got
a one-stop shop for almost anything.
That's the idea. And the reach is incredible, operating across Southeast Asia, Cambodia, Indonesia, Malaysia, Myanmar, Philippines, Singapore, Thailand, Vietnam. It's a huge market with so much growth potential.
And they have over 12,000 employees.
That's right. A massive workforce led by CEO Ping Yao Tan and CFO Peter Oey.
So let's get into the financials then. The first thing that jumps out to me is their revenue growth, like 112.30% in 2022, another 64.62% in 2023. Those numbers are wild.
Yeah, their growth has been impressive for sure.
But are they actually making money? Profitability is what investors really care about.
That's the key question, and it's where things get a little more complicated.
How so?
Well, currently, Grab is not profitable. Their FY 2023 earnings per share was negative 0.1111 cents.
Interesting. So they're growing rapidly, but still operating in the red.
Right.
Is that like a major red flag for investors, though? Should we be worried?
Not necessarily. It's pretty common for high-growth tech companies, especially in a market like Southeast Asia that's constantly changing. They're focused on grabbing market share, building their infrastructure, expanding into new services. That takes a lot of upfront investment.
So it's kind of like they're playing the long game, hoping to dominate the market, and then the profits will come later.
Exactly. And there are some signs that it could be working analysts are projecting that Grab could actually become profitable by FY 2025 with an estimated EPS of $0.04.
Okay, so there's hope for the future. But even if they hit those targets, how do we know if Grab is a good investment overall? What are some of the metrics we should be looking at?
Well, besides earnings, you've got the price to sales ratio, or PS
Yeah.
Grabs, currently at 6.7,
6.70. Okay.
which is relatively high compared to more established companies, but not unusual for a high-growth tech company.
So a high PS ratio means investors are basically betting on future revenue growth, right?
Right, they're expecting big things.
But what about their debt? Are they taking on a lot of risk to fuel this expansion?
Actually, their debt-to-equity ratio is surprisingly low, just 0.05, which suggests they're being pretty careful with their finances, not relying too much on borrowed money.
That's good to hear. What about free cash flow? Since they're investing so heavily, I'm guessing that's not looking so great.
Yeah, you're right. Their free cash flow is negative at the moment, but that's expected. With their current strategy, the important thing is whether it starts turning positive as they grow and mature. That'll be a strong sign of long-term sustainability.
Makes sense. Okay, so we've covered their financials. What do the experts think? Are analysts generally optimistic about Grab?
Overall, I'd say the sentiment is cautiously optimistic. The average analyst price target for Grab is $5.61, which is a potential upside of 23.57% from the current price of $4.54.
Wow, that's a pretty decent jump. And most analysts have a buy rating.
Yeah, the majority seem to think it's a good bet.
But I'm sure not everyone is convinced. There must be some concerns, right? There's always different perspectives when it comes to these things. Who's not so bullish on Grab?
Yeah, for sure. One analyst who stands out is Sachin Salgaonkar from Bank of America Securities.
Oh, yeah, I've heard of them.
He actually just recently downgraded Grab from a strong buy to a sell.
Wow, that's a big change. Why the sudden shift?
Well, his analysis pointed to the competitive landscape in Southeast Asia. It's getting pretty intense.
I can imagine lots of companies vying for the same customers.
Exactly. You've got regional players like GoTo and Sea Limited, and then global giants like Uber and Foodpanda, all trying to get a piece of the pie.
So even with a super app, it's not a guaranteed win.
Right. Salgamkar's concern is that Grab's expansion strategy might not be sustainable long term with that level of competition.
That's a fair point. So where does that leave us? What are the big takeaways from this deep dive into Grab Holdings?
I think the main thing is Grab is a major player in a region with huge growth potential. They've built this incredible ecosystem and they're expanding rapidly.
And while they're not profitable yet, the forecasts suggest they could be on track to profitability in the next few years.
Exactly. But investors need to balance that potential against the risks. The competition is fierce. No guarantee. Grab's strategy will work out in the end.
So is Grab Holdings a super investment? It feels like we've covered a lot, but the answer isn't so simple.
And that's the thing about investing. There's rarely a clear-cut yes or no. It all comes down to your personal risk tolerance, your investment goals, and how much you believe in Grab's ability to handle the challenges ahead.
It's definitely a company to watch, and Southeast Asia is a market to keep an eye on for sure.
It's a fascinating region with such a dynamic tech scene. Who knows, maybe the next big global tech giant will come from there.
That would be something. Well, to our listeners, we hope this deep dive has given you a solid understanding of Grab Holdings.
It's always interesting to break down these complex companies and industries.
Absolutely. Thanks for joining us.
Thanks for having me.
And to everyone listening, please like and subscribe. We'll see you next time.